Bitcoin has been rejected at $50,000, and this morning it's been given back its gains on the CPI release. But will it continue lower, or will it actually break above $50,000 and start heading back to the all-time high? At the time of recording, you can see that Bitcoin is at about $49,000, and it has given up some significant gains and crashed all the way down to levels that we haven't seen since way back earlier yesterday, I guess it was, really. I guess we haven't given up that much gains after all. You wouldn't know it, though, looking at all of the videos people have been putting out today, as everybody's been using that clickbait to act like Bitcoin is dumping. If I zoom out, though, you can see that it looks like we have hopefully found some support at this previous level of resistance at about $48,500. And currently, it looks like on this hour chart at least, we do have a small bullish divergence, which is playing out to the upside. And maybe we will make a higher high here, finally breaking and confirming that we're going to stay above $50,000. Zooming out over here on the daily chart, though, as you can see, we have actually hit this upward trending resistance line that I've been talking about in a lot of my previous videos, and that seems to be where we got rejected, and this has me a little bit worried that we might be coming back down at least to maybe the middle of this ascending parallel channel, because as you can see, a lot of times in the past, we have come down to about that halfway mark, bouncing off of it before going back to the upside. And if we don't hurry up and make a higher high here, that could bring us down to under $45,000 again. And if we don't find support there, then this next white line, which is this upward trending support line we've been bouncing off of, is all the way down here at about $36,000. I don't think we're necessarily going to go down there, as we have started to see the buying pressure outweigh the selling pressure from GBTC and all of the ETF inflows. And if we break above this upward trending resistance line, then I think we're going to go parabolic, and really chart analysis might not work at that point, because when crypto goes parabolic, it just blasts off and doesn't listen to anybody's charting. It looks like the reason for the drop is actually the hot CPI data that we had today. And according to this article on Cointelegraph, it looks like BTC price headwinds have increased as inflation worries return for the Fed. And if you look at the CPI data over here, you can see that we did actually come in at 0.4%, which was 0.1% higher than the forecast and 0.1% higher than the previous reading as well. This isn't all that significant, but it does seem like maybe inflation is starting to tick back up just a little bit. As I've said in the past, though, nothing goes down or up in a straight line forever, and we are going to see some fluctuations in these numbers. We still have about 35 days until the next FOMC meeting, and right now it looks like we actually have about a 91% chance that they're probably going to continue with their pause, and previously we were expecting, I think it was about a 60% chance that they were going to do a cut in May, but now it looks like we're seeing a 63% chance that they're going to continue with their pause. This means that the market is basically pricing out those rate cuts that they were expecting before, and now they're not expecting the first rate cut until June, with a 51% chance of it even happening then. According to this article on Yahoo Finance, NYCB, or New York Community Bank Corp, has seen their shares drop as rate worries add to the CRE exposure risk, because investors are worried that delays to interest rate cuts could worsen the bank's woes from its exposure to stressed out U.S. commercial real estate. I don't think this is really anything to worry about, though, because we actually saw all of these banks starting to collapse about a year ago, and whenever that happened, the Fed made the BTFP, or Bank Term Funding Program, to add liquidity, propping up the banking sector. The BTFP is supposed to be cut off in March, which is less than a month away, but if we continue to see these banks having trouble, then I think we're going to see the Fed come out and do something to add liquidity back into the system. Because as you can see, it is true that NYCB has dipped about 3 or 4% today, but that's just the tip of the iceberg, because it's been down more than 68% in the past week. And if I actually zoom out to like the weekly chart, you can see that it's been in a slow bleed since 2004. This bank has been in trouble for a long time, and I don't know why they thought that they could buy all of those assets from Silicon Valley Bank and the like. And like I said, whenever all of this was going down last year, I figured that this was going to come back to haunt them, because those assets were just no good, and it was a bad investment. So now that the Fed's liquidity program is coming to an end, it looks like so is their business. And if this contagion effect continues to spread through the market, we'll probably see other banks like Western Alliance Bancorp collapsing, like they started to do back whenever the other banks were going down last year, and they only recovered due to the Fed adding that liquidity. They still haven't made a new higher high since January of 2022, though, and it looks to me like they're still probably in trouble, and they could be the first to catch this sickness if the contagion continues spreading. It's not just those two banks, though. As you can see, the whole banking index is down about 11% in the past few days, and it too has been struggling for more than a year now, with it reaching its peak back in January of 2022 and not recovering, even though the rest of the market has been absolutely ripping. In case of a banking sector collapse, the Fed is going to have to continue printing more money, and either you're going to lose money in your banking collapses, or the Fed is going to continue printing the dollar out of existence. But either way, there's only one way to escape this system, and that is Bitcoin.
I mean, look, the verdict's in, right? Wall Street doesn't just like Bitcoin, they love Bitcoin. If you think of these assets, there's been over 5,500 ETF launches in history. Never have we had a fund get to $3 billion in AUM in the first 30 days. BlackRock and Fidelity both just did it. So two for the first time in history. And then if you look at Bitwise and 21 Shares, ARK, they're both going to hit $1 billion this year, or this week. And so now you have four funds that are going to hit $1 billion of inflows. But the most interesting part of this is the inflows. I mean, these funds are doing $500 million a day of net inflows. But there's only 900 Bitcoin that is actually coming into the daily incoming supply. And so when you look at that, that's like $40 to $45 million. There's 12.5x more demand for Bitcoin than what's being produced on a daily basis.
So how much of this do you think is being generated by the ETFs themselves?
Well, I mean, you can just measure the actual net inflows, right? And so you can just see there is way more buying pressure.
So you're saying $3 billion for BlackRock.
There's $4 billion now for BlackRock, $3.5 billion for Fidelity, and then you've got Bitwise and 21 Shares will both hit about $1 billion this upcoming week.
Total valuation, though, of Bitcoin on a market cap is $1 trillion. So isn't this a de minimis issue or no?
Now here's where it gets really interesting.
Most of these things aren't trading.
80% of all Bitcoin in circulation has not moved in the last 6 months. You have only about $200 billion that's actually tradable. And so that means that these ETFs sucked up 5% of the entire tradable supply of Bitcoin in 30 days. I mean, Bitcoin has become Wall Street's favorite asset.
So as more people continue to flee the system, the supply of Bitcoin is going to continue being squeezed. And whenever that happens, there's not really any other place to go but up. And regardless of whether or not we have a retracement or actually get rejected here at $50,000, eventually we're going to find support, and the next stop is going to be the moon. So let me know in the comments if you guys have your bags packed and you're ready for launch. But either way, thank you so much for watching, and don't forget to hit the like and subscribe button. But most importantly, don't forget to have a wonderful day, and I'll see you next time. Bye.